Okay guys, so Marathon Digital today so far is up 10%, trading above its 50-day moving average, above $22 resistance and $22.50. That's where it is. We still have one more hour until market close. So one thing I wanted to talk about this video is, correlation with IWM. Okay, Russell 2000. Why I gave you guys last time this example where basically perfectly tracks is very, very simple. Unprofitable companies or companies that are very sensitive to rates, they move off of bond prices as well. Because anytime you see, right now we have high interest rates, right? So anytime you see bond prices come down, yields come down, it pushes Russell 2000 stocks. Particularly, IWM is a Russell 2000 ETF, which is today 1.6% up, while tech names, I think, negative or flat, QQQ, and SPY also barely positive as well, 0.3%. So, you can watch different stuff, but I come here, take a look at the yields and follow 10-year. So today, 10-year slight decline, and that's why all the small caps are catching bid. So if you think that this is not only related to Marathon, I'm just giving you example that I gave you last time, that if bond yields come down significantly, market, basically capital has to come out of all those fixed incomes wherever they are sitting, wherever they are hiding, receiving 5% for their money. They will come out and they buy risky assets, and they will buy assets because in a high inflationary, low bond yield environment, capital, better off sitting in equities versus sitting on a low return and negative, basically, if you include, inflation. So, and if you guys don't know Tom Lee, he was referring yesterday, or I don't know, like a week ago, I was watching him yesterday, that Russell 2000 ETF, which is, Russell 2000 index, which is small caps, can rally for the rest of the year 50% from here. So this is Russell 2000. If you look at the yearly chart, this stock is way behind tech, way behind NASDAQ, Dow, S&P 500. It's barely up, 2.5% or so year to date, maybe 3% or so. So he thinks that it has a lot of catch up to do, but before you jump into any small cap, that's what you have to keep an eye on. If the bond prices come down, if the yields drop before any rate cut, before Fed, it's not until end of the year. You watch the market front run. Basically, market will come in and push these small caps higher. So in Marathon case, this is same thing, rate sensitive stock, and definitely can push higher with IWM. It's very, very correlated. Right here, it dropped a little bit of a uncorrelation, or a little bit of both, I want to say. Maybe bond prices went higher, and plus they did an offering, and plus technical resistance, all combined. So right here, right now, basically for Marathon, same levels, 24.68, that's the resistance, 28 resistance, 30, 32. These are the resistance levels I'm watching. But right here, right now, 22 lifeline for the stock. It has to stay here. Options. So if you take a look at the total option flows, there are still a lot of calls coming in for this name every day. With time, 800,000 total call volume. I'm looking at the all available chains, and 439,000 puts. So you guys can see yourself inside of the calls. So another thing, going into halving, just like I said, I still think that halving is priced in. If the stock has to move, it will move purely because of the rates. If the rates come down, the stock will go higher. So going into April 19th, okay, expiration date, pretty big expiration date. You guys can see how much of calls are concentrated here. Millions, hundreds of millions. And maximum pain is $19. It doesn't mean that stock has to close at that level, but usually it does. Whenever you see this kind of concentration, market makers tend to basically stock hovers around at the level where both call buyers and put buyers will get hit maximum, but not always. So that's another thing I wanted to mention, but that's the update for Mara. Thanks for watching. See you in the next one.